Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right. Back here on the Investor Coaching Show, Paul Winkler, talking money and investing. Yeah, speaking of crypto investors, there was an article that was out there. I don't even know where on earth I found this. But there was crypto investors. They got pretty much everything that they wanted in 2025, yet prices still fell. Looking for more help from the White House in 2026. Save us from our bad investment decisions is kind of what I read this as. They're hoping for more positive developments on the policy side to reignite price momentum. And will it happen? I don't know. I don't predict this stuff. I've seen people chase after stuff, and for years things, they stay aloft that never should, as far as I'm concerned. But I've been doing this show for 25 years, and when I see stuff like this, my instincts are pretty good that it's not something that you want to do. And then it comes crumbling down, and then people sit there and go, "Oh, gee, what lessons did we learn from this?" I always love that line. What lessons did we learn from this mistake? And I'm like, well, you probably should have learned the lesson before you made the mistake. It's my thing. But it says crypto investors got almost everything they wanted in 2025. A crypto president in the White House, talk of federal Bitcoin reserve. I had almost forgotten about that. That they have and I remember talking about that on the show here this year. A Bitcoin reserve. And the thing that was kind of funny, as I recall, is that they were funding it by taking Bitcoin from criminals. So people are thinking, yay, the White House is going to buy Bitcoin. They're going to drive up the price of Bitcoin. And what did they do? They just took it from criminals. So there was no extra demand created for it. And that didn't work out so well. And then they had friendlier regulations. And of course, what did their regulations really focus on? Stablecoin, which I said is more like a currency and more inclined to be a currency, which is backed, most of the stuff is backed by the dollar, which isn't terribly helpful from an investing standpoint, because if your crypto is dollar based and the dollar is what you're buying it with, it's going to stay with the dollar, so the return will be pretty much non-existent. Now, I get that there are some companies out there using it from lending, and they're paying interest and things like that. But the reality of it is that it's not something that would be a great long-term investment, and it's incredibly risky. But even the regulations didn't help. It's the point that they're making in this article. A wave of exchange-traded funds. Oh, so we got new exchange-traded funds investing in this. Investing in smaller cryptocurrencies, a handful of high-profile digital asset companies making their public debuts. All of this stuff was supposed to be great for Bitcoin. It was all supposed to be great. What happened? Prices fell. And then you have this. There was another article that was talking about crypto whales. These are people that own lots of it. And they're selling Bitcoin as it sinks further below 100,000. Should investors be worried? It says data has shown that some whales recently stepped up their Bitcoin sales. They're getting out of Dodge. Finally, you have the liquidity to sell without destroying the market completely. Is one of these people that they actually interviewed talking about that, which makes a lot of sense. In other words, when you're dealing with penny stocks, low price securities, where there isn't a lot of volume traded on a day-by-day basis, literally your decision to sell even a small amount of it can drive its price down. So if you don't have a lot of stuff traded on a day-by-day basis and you decide, hey, I'm going to get out of this, literally your decision. I remember one lady that came in, and it was somewhere between $1,000 and $2,000, as I recall, of a stock that she wanted to get rid of. So we pulled up an investment. I think it was Schwab. We pulled them up on the phone. And I said, hey, what happens if we get rid of all of this? Can we just do a market order? In other words, sell it for whatever the market will bear. And the guy goes, you may want to do a limit order. And I said, well, why? And he said, well, literally, if you sell $1,000 or $2,000 of this stock, you'll probably drop the price by, I forgot what percent. It was a large percent. I was like, oh my gosh. He said, yeah, it's very thinly traded. Well, now with this, you have so much of this people buying this, the general public going, I want in on this. And people are looking at buying, because, they're typically late to the party. The general public is, they, after something has gone up, then they notice it. I mean, that's pretty typical. It's typically after the tech stocks went up, that when people started buying tech stocks. It was after oil stocks went up, that's when they started buying. After energy stocks went up, they started buying it. After real estate went up in value, people start buying. That's what happens. That's what investors tend to do. They tend to be late to the party. Well, basically what happened is they said long-term holders, their selling has been intensifying since December of 2024. And this is one of the factors has been that the market's been absorbing the selling. And when long-term holders sold the Bitcoin last year and earlier this year, other buyers stepped in to support the price, but the dynamic appears to have shifted, they said. One sign of softer demand can be seen in flows into investment products. And so basically what happened is investment products, have these new ETFs that allow you to get into Bitcoin, right? And I see the commercials all over the place. Well, what's happened recently? Check this out. Over the past 5 weeks, a total of $2.6 billion has flowed out of Bitcoin ETFs, the largest 5-week outflow since the 5 weeks ending March 28th. So basically what's happened is people are like, oh man, I can't believe I bought this and it's crashing and it's gone down. Get out fast. Adding to the pressure, the broader macroeconomic environment has not been supportive of risk assets, they say in here. And this is what we see time and time again. Investors get burnt. The whales even are just going, well, man, I think it's time to get out and take the money and run. And that is exactly what we're seeing right here. And will it continue? I don't know. I'm not going to predict that. I'm not in that job. Will people go and push the price back up again and buy and will demand be driven by people hyping it again? You just don't know. People can be very, very difficult to predict. That's all there is to it. But this is something that from the start, I have told people, this is not something I recommend. It is not an investment by the traditional definition. There is no cost of capital. There's nobody paying to use your money. Its value is based strictly on supply and demand. And if that demand dries up, and that's basically what we're seeing here, that's what they're talking about here, the demand drying up and the supply, basically, you got more supply on the market because people, the whales, so to speak, the people that have lots of it are selling. That has a pretty bad effect. Deleterious effect on the price. And it can be bad news. So heads up on that. Hey, just a note to you podcast folks, we just came out with a retirement income guide and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money. And rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities, and interest-bearing accounts, and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. All right. Back here on the Investor Coaching Show, Paul Winkler. Okay, Nick, this is your article.
Mine?
Yeah. before we started the show, what were we talking about? Cars.
Oh, yeah.
And
Cars.
Features, auto features.
Yeah, all the stuff I don't like.
The vehicle driving for you, right? And you don't like that? Less traffic, more lounge time, cheaper homes. How robo-taxis promise a whole new world. This was out there. It says a few thousand autonomous vehicles on the road today. Widespread adoption of driverless cars may seem like a far-fetched fantasy, but robo-taxi dominated future might be arriving faster than you think. So Morgan Stanley, big bank, they project that 98, this is 2050. We're talking like 25 years from now. They're projecting that 98% of all cars sold globally could be autonomous. Just think about that.
It's scary, dude.
Is it scary?
Yeah. Yeah, I don't like it.
And they have this. It's interesting because they have the statistics on it. It says autonomous vehicle companies envision a future where most humans don't need to touch a steering wheel. I like driving. I need my airplane. I need my flying car. That's what I want. And even then, they won't let me drive it. They won't let me fly it. It'll still be like automated. But at least I'll be flying. I mean, the way I look at it, at least I'll be up there and looking down and go, that's pretty cool. Oh, that's pretty cool. Hey, I don't have to fly the jet plane that I take, when I travel around the country. Why do I feel like I have to drive my flying car? I mean, reality is nobody wants to be flying that thing.
I think flying cars is a bad idea.
I think it's a great idea. Oh my gosh. No. We'll have to just agree to disagree on that one. Autonomous vehicle companies envision a future where most humans are not going to need to touch a steering wheel. Based on 127 million fully autonomous miles, Waymo says its vehicles were involved in 90% fewer crashes that resulted in serious injuries than human-operated cars. So they're saying it's a lot safer. And they said that Waymo had sparked a media frenzy, when one of its cars accidentally killed a beloved cat in San Francisco, which has reignited that when a robotaxi ran over a small dog some weeks later. No human fatalities have been directly caused by Waymo robotaxi, but it's a matter of time. And it's just like, the media, you just imagine the media coverage on that. It's like, do we feel better when it's a person that's driving that kills another person? Do we feel better about that versus something? Because it's almost like you got somebody to blame. And I think that's just an interesting. I'm not trying to answer the question. It's way above my pay grade. But I just think that's, wow, you think about it. We have a much safer way of doing things. But do we have the tolerance for that as a society to put up with that somebody actually ends up getting killed at the hands, figuratively speaking, of a autonomous vehicle? Just something else. And then related to that was this, even the companies making humanoid robots. I thought this was good. Wall Street Journal. Even companies making humanoid robots think they're overhyped. They're basically saying that billions of dollars are flowing into humanoid robot startups, and investors bet that the industry will soon put human-like machines in warehouses, factories, and our living rooms. But a lot of these leaders are looking at this going, hey, don't get too excited too soon. They may have all these great advances, but the technical challenges are pretty daunting. And they said that the human-shaped robots, they fall over. And that can be a problem. Their shape, they're not reliable. They can't perform complex tasks yet. And they said that for every $100 spent on deploying robots today, only around $20 is the actual machine. The rest of it is spent on equipment to protect people from injury because of what these things are doing. I thought, wow, that's interesting. And they're looking at, putting the prototype of a robot designed to clean office spaces. And they says, they got surface cleaning it can do and take the trash bins out. But the big thing that they got to get it to do is to clean the toilet. That's the big thing. If they can get it to clean, the toilet, they got something. And, because you've seen the stuff out there trying to get these things to fold shirts and things like that, it's hard to get but what are they going to do? How are they going to get that to happen? Elon Musk seems to think it's coming. It's just a matter of time. You heard the story about him talking about what we're going to do is we're going to have a robot. We're going to let the people out of prison, and we're going to have them followed around by a robot that makes sure that they don't commit a crime. Nick, you heard that?
Yeah. I've also seen the movie I, Robot.
Okay, I haven't. I haven't even heard of it, let alone seen it.
Okay.
No, what is that?
I, Robot with Will Smith.
No. I know who Will Smith is, believe it or not.
You need to watch I, Robot. It's a great movie.
Is it really?
Yeah, it's a great movie.
Why? What's so great about it?
Oh, it's all about humanoid robots taking over and killing all of humankind, and yeah.
Unplug the doggone things. Unplug the doggone things. Oh my gosh, that's so funny. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.